Today, what we will be studying is we'll be studying about sovereign gold bond, right? SGBs, which are right now open. Gold can be in various forms. It can be in physical gold, right? It can be into gold related mutual funds. It can be into gold manufacturing companies, and you can invest into mutual funds in that route. You can invest into ETFs, exchange traded funds, and also you have sovereign gold bond. So we'll compare what is the difference. We'll be looking at the taxation part. We'll be looking at the differences of SGB with respect to the physical gold. What are the advantages with respect to the ETF? What are the advantages, right? And we will also look what are the returns expectation. We will compare with earlier SGBs which has already matured, right? We have an 8 years tenure for it. Of course, as it is listed in the stock exchange, we can liquidate it at any point of time, but if held till maturity, we can get tax-free returns, right? Tax-free returns. So we'll be going more into it in detail in our today's discussion. Okay, so let me share my screen. And yes, before sharing or before going into this topic, what I want every one of you to keep some benchmark standards is, right? It's not that you have to be heavily exposed into gold or even silver or even per se any commodity. Any investment into gold should be considered as an hedging kind of an investment. So what I would preferably ask you to think about is whatever is your entire portfolio, cap your portfolio to up to 10 percentage of investments into gold or silver related, right? So that when your overall stocks or in the entire portfolio returns, even though there is some volatility, right? Gold can be a hedge with respect to stock market, right? So your investment into physical gold, your investment into digital gold, right? All the investments related, keep a cap of 10 percentage into gold and silver related in commodities. Keep a tab on that. Okay. So let's look at sovereign gold bond for our today's discussion, right? So first, we will be categorizing these segments into 7 segments we will discuss today, right? Yes, sovereign, as the name suggests, it's guaranteed by government of India, right? The purity of gold is guaranteed by government of India. So yes, there is a seal of trust there, right? There is a seal of trust. Coming to the returns part, right? So SGBs replicate, right? SGBs replicate the market value of gold at the time of maturity, right? Why it's an alternative to physical gold or ETFs is, right? Whatever is the price of gold when you have invested, that's your investment amount. And during the maturity, right? Whatever is the gold value that is applicable to you. And apart from that, the additional benefit in SGB is we get an additional 2.5% interest per year, right? And third, let's look at the present issue details. Right now, from February 12th to February 16th, right? February 12th to February 16th, the present SGB issue is live, right? Where you can apply from your internet banking, from your iMobile, you can apply from a physical form, right? Or going to the branch, you can apply. And preferably, it is better to invest through electronic form, right? Electronic form. And the price per unit is 6,213 rupees for the online application. And the minimum investment you can make is 1 gram, and maximum investment is up to 4 kgs per financial year, right? 4 kgs per financial year. And the entire tenure of the holding for an SGB series is 8 years with option of early redemption, right? With option of early redemption. So as these SGBs are listed in the stock exchange, you have that opportunity to redeem also, right? So every 6 months, starting from 5 years and 6 months onwards. Now, let's look at the liquidity part, one of the main reason where majority of the investors have some difficulty is, sir, tenure is too long, 8 years holding, right? But yes, as it is listed in the stock exchange, right? And it offers liquidity when funds are needed, right? When funds are needed. And now gold is one form of investment where we can enter through multiple routes. Let's discuss what are the salient features with respect to physical and ETF, right? Physical gold and ETF. So first form is good alternative to holding gold in physical form, right? So physical form, you have the problem of storage, right? Theft, any kind of a issue is there here. But in SGB, as it is an electronic form, we have an advantage, right? There is no risk of theft, or there is no cost of storage, right? If there is a physical gold, maybe you have to store it in a locker in your bank, so there is an annual cost involved in it. And even if you are investing in physical gold for investment purpose, for the initial stage, you'll have your initial making charges. And nowadays, with the kind of more gold players entering into the market, the purity of gold is also at risk, right? And these are the main hassles of physical gold. But as we discussed earlier, the purity of gold is guaranteed because there is a seal of trust here by Government of India. And yes, for physical gold, GST is involved. Here in SGBs, there is no GST. And you get returns as per the market value of gold at the time of maturity. And additionally, this 2.5% interest per year is an add-on. And the best part is, as SGB is an investment, is a financial instrument, right? You can use it as a collateral for availing loans, right? So SGBs, yes, can also be as a collateral. Now, let's look at the taxation part. First of all, whatever is the interest accrued is taxable as per your tax slabs, right? Every year 2.5% taxation is applicable as per your tax slabs. But yes, someone is holding the entire SGB series up to 8 years, right? That is tax free, which means if you are holding till maturity, then capital gains is exempted. It's a tax free investment, right? So if you look at broadly, one, there is no GST applicability. Second, if you are holding till maturity till the 8th year, whatever is the gold rate, you'll be getting proportionally, and it is tax exempted. Only that your interest per year is applicable to be paid interest as per your tax slab. Now, if you are not holding till maturity, if you are selling it in the stock exchange, yes, as it is listed in the stock market, as it is listed in the stock exchange, before maturity, if you are redeeming it, then there is capital gains which is applicable. Now let's compare the taxation for physical gold versus gold ETFs versus your SGBs. Physical gold, if your holding period is more than 3 years and above, 20% post indexation, and gold ETFs are straight charged at your income tax slab rates, right? The taxation is as per your tax slab rates, right? So this is the difference between the taxation part. And lastly, before we have an idea about this entire investment, let's look at what exactly has been the performance of earlier tranches, right? Earlier tranches. Yes, we had a first SGB tranche, which was launched in November 2015, as it's an 8 years holding period. In November 2023, we had the first maturity of the first sovereign gold bond tranche. And this has given a returns of around 10.86% per annum, right? 10.86% per annum, which is a decent returns, beating the inflation returns, right? Beating the inflation returns. And additionally, we have also received a 2.5% interest per annum. And we had the second SGB tranche, which has been from February 2016 to Feb 2024, where the returns were 11.91 percentage per annum. And yes, on that additionally 2.5% interest per year is an add-on, right? So now you look at it in a holistic manner, right? You look at it in a holistic way. For all the investors who can hold till maturity, and yes, sir, out of my entire investments, instead of keeping all the eggs in one basket, I wanted to diversify, right? And gold, majority of the Indians, right? Majority of the investors look gold only as a physical gold investment, right? And yes, being from decades, right? Physical gold is a part of our life, right? But if you are looking at an investment purpose, rather than accumulating more on physical gold, right? For self-consumption, a different part. But if you're looking on an investment part, instead of entering gold into a physical gold, look at ETFs, look at mutual funds or sovereign gold bonds, right? And someone who can hold till 8 years of maturity, as we get the tax exemption, no GST related, right? We don't have the issues or hassles of physical gold, of making holding charges and all that. SGBs make a very good sense. And additionally, the 2.5 percentage which we accumulate is also a good add-on. And in case of any emergency, yes, as it is listed, we can liquidate it from the stock exchange, or we can use it as a collateral also for additional, for availing any loans like that, right? So as a overall, the first thing you have to remember is accumulating physical gold more on investments is not ideal. Rather enter through an electronic form, right? Rather enter through an electronic form. And I want you to do a math. Out of your entire holding or your entire portfolio, how much part of your investment has been into gold or silver, right? And if there is a gap, yes, you can consider looking at gold as an alternative investment or as a hedging tool for your present portfolio, right? So physical gold, maybe for your personal consumption, ornaments related like that, but for investment purpose, consider financial instruments in the form of gold investment. Okay, so I hope everyone loved this discussion. Let me know below whether you are going to invest into SGBs, ETF, or physical gold, right? Whatever it is, let me know below. Okay.